Indonesia and India looks much better right now, but I think that you need to be cautious because this year, with the Federal Reserve increasing its rates and given the fact that there's neutralization of the balance sheet as well, bond yields in the US, particularly on the 10-year, could perhaps actually overshoot past 2.5%. Now, if that's the case, that's going to put pressure on the US, on the Indian and Indonesian government bonds, pressure on the yields to actually go up. And in turn, basically, that means that perhaps there could be a chance of the currency depreciating beyond what we think is likely to actually happen. Now, if that's the case, then there could perhaps actually be a little bit more pressure on both markets. But I think the pressure this time around is a little bit more alleviated because don't forget that on a starting point, most of the G10 currencies, most of the G10 economies in the world are coming in from a higher base of inflation. So the risk towards a currency war is actually very, very, very much limited. In fact, a reverse currency war could perhaps actually be coming because of the fact that most countries would want a higher starting point for the currencies to avoid any imported inflation. So from that standpoint, I think India and Indonesia actually looks much better today compared to previous episodes of the US rate hike cycle.
Yeah, reverse currency war. Odd that you should mention that, Kel, because, I mean, one of the things we're hearing from the G20 meeting of finance ministers and central bankers ongoing in Jakarta, the Indonesian capital, is they are planning to do LCSs, local currency swaps, as a way to protect themselves in the event the Fed is forced to become a lot more aggressive than is expected or is priced in right now and ends up overcooking it, and dollar spikes, which is going to hurt their currencies and lead to massive foreign capital flow out of their countries. What do you think of this idea of local currency swaps?
I think it makes perfect sense because India and Indonesia are countries which are not net exports, so a strong currency does not really hurt them in that sense, not especially in this kind of environment. So India and Indonesia do need to actually implement some sort of a local currency swap if the dollar is likely to actually appreciate and become strong in the course of this year and next year because of the rate hike cycle. And also, of course, a local currency swap actually makes a lot of sense from the standpoint that you actually do away with the spread between the currency to the dollar and the dollar to the other currency as well. And that actually helps to save a lot of costs on the ground for the importers in that sense. So I do think that the local currency swaps actually do make a lot of sense from an import perspective because, again, India and Indonesia are net importers. They're very consumer driven. And any appreciation in the dollar against the local currencies would suddenly hurt them from an inflation perspective and increase the current account deficit that both could potentially actually have.
And Kel, how does China play into all of this? Because, I mean, Yi Gang, the PBOC chief, their central bank boss, seems to very much for this idea. Is it simply because if it leads to ultimately less dependence on the dollar as a trade currency, it potentially could mean the renminbi could make more inroads, become more internationalized, no?
China is absolutely crucial because of the dominance of the Chinese trade within this region. For example, I think in the emerging markets, China actually accounts for about accounts for about 30% of bank lending and FDIs in the emerging markets. And China actually accounts for about a quarter of the trade within this region. So if China agrees to that and goes into this local currency swap agreement with these countries, it certainly can actually move the needle in that sense.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.